Greetings, and it's time for another monthly monetary creation report, in this case for May of 2021. So how much more money was printed in May of 2021? And was that too much, too little, or just about right? Now, as you've already seen the thumbnail for this video, you know that the number is 500 billion. But let's see what the details are, because the devil is in the details. So we go to this report from Yardeni Research, which I have cited last month and in prior months as well. And we first go over here to the four large central banks of the world. They do not comprise 100% of all central banks of the world, but they comprise about 85 to 90% of the printed money. A lot of smaller banks are also printing additional money. And the narrative in the United States is that the Federal Reserve is printing so much money, therefore there should be inflation. And now that's absurd for a number of reasons that I speak about in many other videos, because the US Federal Reserve is not only not the largest printer, that would be Europe. Europe is the biggest printer by far, the blue line over here, ECB. But the Federal Reserve is only about 25% of the world's total. And in recent months and years, it has only increased by this much. So this money printing, for the most part, is not a whole lot that's new. Now, if you go to the grand total, the real important data, remember, you always have to look at worldwide data, worldwide monetary creation, because money printing is borderless. And technological deflation is also borderless. So people saying the Federal Reserve must do this or that, or the Federal Reserve is printing so much money that we're going to have domestic inflation in the US, they still think it's the 1970s. Now all these countries are borderless in terms of monetary creation and technological deflation. When you send an email to another country, there isn't any special gateway or customs procedure or anything that goes through. Also, when you purchase software over the internet from another country, then the transaction experience does not have any such gateway or cross-border procedure or anything like that. But people don't get it. They still only think of the United States Federal Reserve as the only central bank in the world. So the more accurate measure, which we see here, is the four big central banks and their cumulative amount of money printing. As we saw, they were printing, and there was still no aberrant inflation. Inflation was very contained during this whole period. Then in 2018, they got the bright idea of stopping and even slightly reversing some printing, and there was a big market correction, and so they had to resume. And then the COVID crisis hit, which means they had to do much more, but it only served to get us back to the trend line that we should have been on anyway. So this much printing would have occurred by now, perhaps in a different form, but by now, whether COVID had happened or not, because this is just to stay consistent with the trend line. Remember, the amount of monetary creation that happens in the world has to rise exponentially just to keep up with exponential technological deflation. People who don't understand this still think that monetary creation causes inflation, even though the last $30 trillion of such printing has not caused inflation. And even worse, they say that the way around this is to buy gold. And that's a terrible thing to do, because the return on gold has been terrible, and I'll have other videos about that. And I have had other videos related to that topic as well. So these four central banks combined are $29.8 trillion of monetary creation as of May 31st, 2021. That's almost 30 trillion. And as you can see, that is a good 11 trillion after March of 2020, after the start of the coronavirus pandemic. And followers of this channel know that I often cite March 15th, 2020 as the Netscape moment in economics. Why the Netscape moment? Well, if you recall the first Netscape moment, which was August 9th, 1995, that was the IPO of an internet browser company called Netscape, and the entire internet boom for the next 4.5 years started from that point. And even though there was a bust, then it still went on to become even bigger than it ever was subsequent to that point. So the same is now true for economics. March 15th, 2020 was the Netscape moment of economics. That's when the Federal Reserve went to 0% interest rates from what was previously a pretty high and excessively tight Fed funds rate, and decided to resume money printing along with other central banks of the world. And now it is increasingly obvious that money printing has to be permanent and rise exponentially. I've been saying that since early 2016, if you look at my Atom publication, and all the way back since 2010, perhaps even 2006 if you look at some of my earlier articles, depending what you consider the starting point, but early 2016 is fine. So this is how much has been printed. But remember, I maintain that the annual compound growth rate of money printing has to be 16 to 24% a year. 16 to 24% a year has to be the compound annual growth rate. So now we go to the next chart chart 4, which is the most important chart of all. Even though 11 trillion of money printing has been done, you can see that the peak year-over-year growth rate, this is the yearly percentage change, the peak year-over-year growth rate was 46%, and that ended a couple months ago. And now it's already down into the low 20s again. Low 20s is well within my band of 16 to 24% is the amount of monetary creation that must be done just to halt deflation and can be done without any aberrant inflation. So we're already past the risk point. Everyone's screaming about inflation, but the year-over-year growth rate is already past its danger zone and getting back to the normal band that has existed for 11 or 12 years since quantitative easing has begun. Now, there could be a lag effect that causes a small flurry of inflation, and you may see a couple numbers of inflation tick up temporarily, but for the most part, that is very temporary, and it is not by any significant stretch anything pervasive or persistent. And the only reason for that is because there's a lag effect given how much was printed, and even though the year-over-year growth rate has gone past its peak and is in decline again, some of that money has a lag effect of circulation. So we'll look at what measure you should check on to try and measure this lag effect. This is the U.S. Federal Reserve velocity of money chart. Now again, this is a U.S. only metric. It is far better to use a worldwide metric. However, nobody calculates worldwide velocity of money, even though that would be a better metric. It's already been in decline since 2000. It's only about 1.4 even before the pandemic. And during the pandemic, it went down to 1.13, 1.12. Very low, the lowest it's been in many, many decades. The recovery could push it back up to 1.4. It's not going to go more than 1.4 because that's what it was before the pandemic. But the rise from 1.12 to 1.4, if it is fast, that could cause temporary inflation. If it is gradual, there will be no inflation. Now, even if it is fast and causes temporary inflation, that inflation is fuel that fuels more technological change and pushes commodity prices lower again. And I have a lot of videos that track inflation through commodity prices, which is the most comprehensive metric because that is worldwide and not riggable in any way. But this velocity of money chart is the one to look at. To the extent there still can be any aberrant inflation that is more than just some noise level blip, it could occur from this velocity of money metric rising back to what it was pre-COVID. And again, even that will cause only a temporary flurry that only feeds more technology, that feeds more deflation. But it is already very, very well established, as far as I'm concerned, that the annual compounded growth rate of monetary creation has to keep rising at 16 to 24% a year, because when they go below that band, that's when inflation gets too low and the markets correct. And there was not high inflation even when it was well above that band, but I'm still saying the band is only 16 to 24%, which is a band that we have now come back into despite all the printing for the coronavirus crisis. So that is the report. 500 billion in May 2021. That is on top of 300 billion in April 2021. I say the speed limit is about 400 billion based on that annual compound growth rate that I spoke about. So we're kind of tracking that band. Some months a little higher, some months a little bit lower, but that is the general band of intake and ingestion of money printing for technological deflation. Now remember that in 2011 it was only $75 billion a month, and before 2008 it was practically zero because there was not enough technology in the economy. But now we are at $400 billion a month, and that is wonderful because that is net worth that is being added to the world. It's not being added at any level of even distribution. Wealth inequality continues to exacerbate because the way they print money is specifically done in a way that concentrates among very rich people. They should be sending cash directly to people, as I write about, because that would be the more egalitarian way of diffusing this monetary creation to produce more technology and also generate better velocity of money as well. But those are other topics for other videos, or if you have read my Atom publication. So that was the monthly report, $500 billion a month in May 2021, and it's all good. We are not seeing aberrant inflation yet on any sustained, persistent, or pervasive basis. I hope you found this video informative, and if you like this type of content, I encourage you to subscribe to this channel. Thank you very much for watching.